Okay guys, so in this video I want to talk about currencies and we're going to talk about Russia and the yuan and the relationship there, the Russian ruble and the yuan and all the new transactions since all the sanctions came about. But I also want to talk about the yen and the dollar, of course, and it kind of relates to the fact that there's these old economic models that factor in all the currencies, they factor in inflation, they factor in stock market and commodities and bonds. But the new economic theories that are coming out that, that are kind of like changing finance right now, they're factoring in things like cryptocurrencies, they're factoring in things like negative interest rates and 25-year-long wars and big military budgets and the very basic supply and demand type of economic model doesn't really exist anymore because there's so many regulations, there's so much global and corporate control over the markets, right? So that's kind of why I want to talk about all this and make a video and kind of introduce currencies onto my channel. I think it's about time. Another reason that I want to talk about currencies is because I hold a lot of cash. I hold most of my net worth right now in cash, and it's cash that I can trade with. It's cash sitting in my bank account. It's cash sitting in my safe, in places that I can get to. So if I'm going to hold that much cash and if I'm that emotionally invested into the dollar, I may as well be following what's going on with the dollar as, I suppose, an asset or a hedge against depreciating stocks and commodities and currencies throughout the world. So I hope that makes sense. I know that intro was a little long-winded, but let's go ahead and get into a couple of these items because the first thing I want to talk about is the yuan and Russia. Since the sanctions, since the US Euro system kind of cut Russia out, Russia has had to find alternative ways to transact, find alternative currencies to keep, wealth in, and they're building this relationship with China. And the transactions, it used to be, I think, like $1 billion a week. Now it's $9 billion a day are being done in between the yuan and the ruble. But the whole narrative that Putin is sort of having to do this or has no other choice or was not planning for this, I think that narrative is kind of false. From what I'm reading, Putin has wanted to get Russia less dependent on the American and Euro monetary systems. And so, whether the war achieves that aim or not, or whether the war, one of the reasons for the war is to achieve that aim or not, we can only speculate. One can only speculate as to the motives all these people have, but all these, elites, the presidents, the bankers, everybody that we talk about, right? And who knows, there might be other monetary reasons for the war. I don't want to get into all that right now. But I know there are industries that benefit from the war. There's industries on both sides in all countries, and that's something to consider, right? But Putin has wanted to get away from the dollar. So now he's moving into the yuan. Russia's moving into the yuan. And it's really their closest superpower ally. And it's kind of a shame that we're pushing Russia to China. I think it's just a shame that we have to have this dialogue and this narrative about Russia in our mainstream media and in our mainstream politics. But we'll have to keep an eye on that because they keep telling us that we've isolated Russia, that Russia's isolated, Russia's desperate, Russia's resorting to extreme measures, and I just don't buy it. I really don't. I think with all the resources that Russia does have, all the raw materials, how do you isolate a country that can simply just trade with countries like China and India, which dwarf the population. These industries in China and India, potentially, someday, those economies could dwarf the West. And I don't think we should be so naive as to think otherwise, to think that that's not possible. And sorry, I got like a little bit of a, I don't know, just allergic reaction to cat hair, I think. So if you hear me sniffing, let's see. Another thing I wanted to talk about real quick, because it's kind of related to Russia, is that Finland buys more arms from the U.S. The State Department, the Pentagon, they have approved another sale. I think it's a grant of 1.7 billion euros. All kinds of, they have the AIM-9X Block 2 tactical missiles. What company is making that? They have the AGM-154 joint standoff weapons they sold. I don't know, a whole bunch of stuff. All kinds of guns, F-35 stealth jets. Right. So that's the headline, that we're selling this to Finland. I know Finland wants to be a part of NATO, I think. Didn't they file to be partners in NATO right after the outbreak of the war? I think it was Finland. Might have been Holland. Maybe Finland's already in NATO. I don't know. I'd have to go deeper into that. It just seems to me that this seems more like the U.S. military kind of using Finland as a front to have some sort of defensive line there, which makes sense. It makes perfect sense. But when you start breaking down the headline and breaking down the reality of these weapons sales, I think the U.S. military, they're working covertly, all throughout the world. We know that. I got to blow my nose because this just won't do. Let me take off this microphone real quick, guys. Got allergies. Okay, well, that is slightly embarrassing, but you guys know we keep it real on this channel. So I've got some more currency news that I want to cover here. The yen. Let's talk about the yen. All right, so basically, the Japanese yen could be seen as a safe haven for investors, bankers, traders, businesses, governments in Asia, all throughout Asia. The yen could be seen as a safe haven if something really bad happens in China. Now, I think the mass-wide protests and all of the China lockdowns, my suspicion is that there's more of a monetary reason behind this, or maybe not monetary, but a financial or economical reason for China to do this, because the entire world is over COVID. Everybody knows that we shouldn't be in lockdowns, especially 4 years later. Well, 3 years later, I guess. And well, for China, it's getting close to 4 years. I think maybe like next September or something. That'll be like the 4-year mark for China. That being said, I don't want to advertise Coke. That being said, there's something fishy about the whole story. I don't believe it. First, it was iPhone factory work condition protests, and now it's mass-wide COVID-19 lockdown protests. There's a reason they want to slow down their economy. I'm trying to figure out what it is, but there's a reason they're shutting down some of these cities. They're shutting down manufacturing. They're shutting down trade to a certain extent. So we just have to try to figure out why they would want to do something like this, because it's obvious that there's not really a scientific reason, and the Chinese government is so opaque. It's so hard to know how it's structured or exactly why they do the things that they do. But that would be my hunch, right? Is that the central planners, the central bankers, they have a lot of influence over these COVID policies. And I do think that's partly why we saw a global lockdown. But at least in the West, people were just so resistant to it. And now in Asia, supposedly, people are really resistant to this. I'm always suspicious of protests when I see them because I've seen the media stage other photo ops and stuff like that for effect or for propaganda. So I'm always just a little bit suspicious. Nationwide protests. Oh, well, maybe. But the way we'll really know if something terrible has happened in China is if the yen continues to hold its own against the dollar, against other currencies, and if the yen starts to rise. Today, the yen was going up, and this was a lot of the reason that the markets, to get a little market recap here, that was a lot of the reason that the markets were falling. It was a huge rug pull event. A huge rug pull event. I wasn't a part of the rug pull, well, not in a negative way, in a positive way, because I was short and I just saw it coming. I was paying attention to the news all day. We woke up this morning and the mainstream media is telling us, oh, global markets are blowing off the China situation, right? The futures are up 0.2%. Like, what? I just wasn't buying it. And so I was just watching the news, watching the currencies. The dollar was going up as well, which is never a good sign. And yeah, it was just a huge rug pull event. A lot of people got caught up in that. Apple had made, or I think it was Tesla, had made like a reverse head and shoulders. Apple made a similar pattern. And then these stocks just got annihilated on the China news. So, well, at least what was going on in the financial markets. The currencies moving. We didn't get a lot of news, but there was a really big news story that I found from CNN. I found it at like maybe 10 o'clock, 11 o'clock in the afternoon, and the article had come out 6 hours previously, so it was out like at 5 or 6 in the morning. Apparently, according to CNN, there was a military encounter in the South China Sea between U.S. and Chinese forces. We don't know really the extent, but they had harsh words for each other. And I'm reminded of some other articles I've read recently about Kamala Harris in the Philippines. And this is one of the only good things I've heard about Kamala Harris, where she went to the Philippines and kind of reaffirmed America's commitment to the Philippines. And she referred to a treaty, I think, that was made in 1951, where China has agreed not to incur in the Philippines airspace or in their waters. And that's exactly what they've been doing. The Chinese have been making these incursions every so often. I mean, this has been going all the way back to the Obama administration, and Obama didn't really confront them or do anything about it. Maybe there were other issues he was focused on. Maybe China has a lot of influence over Democrats. I don't know. The only recent president that I can think of that's been appropriately tough with China would be President Trump. But everybody knows this. And so Kamala Harris is in the Philippines reaffirming the commitment by America to protect the Philippines, and going back to this, referring to this treaty, and even bringing up the incursions from China. Is this just sort of rhetoric, right? Is it double speak? One can only speculate, but that all of that is going on. And Biden just met with Xi Jinping, however you say his name, So where was I with this? Yeah, the whole thing with China. I think we should watch the currencies. That's really what's going to tell us how banks and governments, traders and investors and businesses in Asia actually feel. The mainstream media lies to us so much. I don't think we should just, depend on their word. Let's go to U.S. currencies and the dollar and the euro, Western currencies. Oh, there was one more quote in here, actually, with the Putin thing. There was a quote I wanted to read to you guys about risky currencies. Yeah, so this basically this hedge fund investor in Moscow says that what happened was that it became suddenly very risky and expensive to keep traditional currencies, the dollar, euro, British pounds. And he said it was a potential danger of a bank that keeps foreign currency deposits being sanctioned. So think about the dollar or the euro, the Western currencies. Think about cryptocurrencies, right? Could we ever get to a point in America where it's dangerous to kind of keep a lot of our wealth in these more traditional currencies like the dollar? I think someday it's possible we'll get there. I don't know if we'll get there in my lifetime. Some people claim that if the dollar's really ever going to truly collapse, you'd have to get a huge spike up. Let's hope that spike is not happening now, but the dollar does seem to be doing fairly well over the past year. I watched some return on investment chart. The dollar had something like a 9% return or something at one point, whereas stocks are down, the NASDAQ is down 30% or SPY is down 25%. So the dollar has definitely been king this year. That has been the truth. Will that be true into 2023? It's possible. That's why when we talk about these Fed interest rate hikes, I mean, just take what Fed Williams said about inflation. This is the Fed president from New York. And he says that inflation could last into 2024, that the fight could last into 2024. And you also had him talking about U.S. unemployment rising to 5%. He says inflation should be under control by 2024 and that it should be down to 3.3%, I think is what he said. And I think he said by the end of the year, it should be 5.5%, which I don't know where he's getting that number from, or that's because weren't we at 7.7? That I didn't understand that quote at all. If you guys understood that quote, please let me know. Because when he was talking about 5.5% inflation rate by the end of the year, I don't think so. But maybe I'm missing something with that statement. Yo, stop looking in my closet. He expects job losses to rise as central banks battle inflation. So not good at all. You had some comments from Bullard as well. Jim Bullard, the St. Louis Fed. And, these guys, these Fed ghouls, they are, they're crazy. I mean, when they speak, sometimes I think, do they have any regard for how it's going to affect the stock market? And I don't think they actually really care that much. There was this quote, though, real quick. Well, not a quote, but so Williams says that rates could come down in 2024 if inflation comes down at 2024, right? But then you have Bullard saying that the markets are underpricing the chance of higher rates, which I suppose he means higher rate hikes as well. Because remember, yes, supposedly 75%, the banks and the investors are bullish on a 50% basis point rate hike for December, right? That's the likely outcome, they think. But there's still 30% that believe 75 basis point rate hike is still possible. And when you look at the European Central Bank, Christina Lagarde's speech from yesterday, I think I was calling her Christina Lombardi. It's Christina Lagarde, if I said that wrong in earlier videos. She says inflation hasn't peaked. She just said this yesterday. And they're talking about possibly 75 basis points. The central bank is talking about possibly 75 basis points for the euro come December 14th. And I think the Feds, they both work in lockstep. The euro raises rates on the 15th. I think the Fed raises rates on the 15th. The Fed has their meeting, their FOMC meeting on the 14th and 15th. I definitely think 75 basis point rate hike, a fifth one, could be in order. I mean, why not? Why not do 6 75 basis point rate hikes if you're really trying to tackle inflation? And the last thing I want to say about all this inflation nonsense, it's not a 2% target. It's a 2% average. The catch is we don't know an average over what? 10 years, 100 years, 1,000? We have no idea. But that's what they're telling us now. It used to be a 2% average. It's not. It used to be a 2% target. It's not a 2% target. It's now an average of 2% inflation rate. That's their target, the average. So we just got to figure out from their words, like, are we talking an average over decades, over the last 5 years? What the hell are they talking about? Because if it's over 100 years, they're going to keep the interest rates and inflation as high as they want to keep it for as long as they want. You know, before they eventually go into negative interest rates and then suck out all the cash. But I won't get into that in this video. So let me know what you think in the comment section down below. Follow me on Instagram @MillennialTrades. And as always, until next time, I'll see you on the next video.